Welcome back. May 22nd, and we've got a packed docket. 10 companies making serious moves today.
From massive impairment charges to wild crypto pivots. Let's get into it.
Starting with Cellcorp, ticker 5078. They slashed their Vision 2030 targets. Sales down 25% to 30 billion yen.
Right. They also took a 166 million yen hit canceling an automated welding robot. But they hiked the dividend payout ratio to 40%. Priorities, I guess.
Over at 6093, a different kind of hit. A 100 million yen bad debt allowance crushed profits.
Yet they kept the dividend flat, pushing the payout ratio to a staggering 191%. That's definitely not sustainable. Plus, they launched a loss-making subsidiary, New Deal.
Crema 4017 is going the opposite direction, spending big, CapEx up 5,900%.
They're pivoting to SaaS with a push notification subscription and pushing into gifting. They're also funding a major platform rebranding next year, though still fighting headwinds from last year's phishing scam.
9388 just listed on the Fukuoka Q board, but there's a yellow flag. Their 309 million yen core system is delayed 6 months.
Plus, 2 clients now make up over 27% of sales. Heavy concentration risk right out of the gate for this newly public company.
Roars, 6323 dropped a bomb. A 7.42 billion yen litigation reserve.
Massive. Net income tanked 19%. They also delayed their Vietnam factory expansion by a year, yet they're proposing to double executive comp limits to 400 million yen. Bold.
Yoshinoya 9861 is consolidating. 6 domestic subsidiaries merging into one.
The parent company turned a 1.6 billion yen loss into a profit, and they're hunting M&A for ramen as their third pillar. But that gender pay gap anomaly at Nishini Hun, dropping from 84% to 46%, needs explaining.
9381 is doubling down on Vietnam, buying out the JV to 99.8%.
They're exiting Hong Kong and hiking dividends to 100 yen a share. Payout ratio is over 100% now. They're clearly returning capital while shifting focus to bonded logistics and AI.
6521 is cleaning house. They sold their Israeli subsidiary Raikol, taking a 1.77 billion yen special loss.
But operationally, they recovered strongly. Sales up 20%, and they're pivoting hard to data centers with new quantum lasers. A smart exit to eliminate the geopolitical risk.
Gyoki 2683 is taking on serious leverage. Assets up 30% funded by debt.
Equity ratio dropped sharply from 38% to 30%. They spent 288 million on a new HQ while closing unprofitable stores. And the gender wage gap widened significantly from 71% to 57%. Mixed signals here.
Finally, Machouse 7603. Actually, it's GT Corporation now.
Wild pivot. They closed 70 stores, started holding Bitcoin, taking an 838 million yen valuation loss, and bought an AI training firm. Net loss widened to 3 billion, and share count surged 65%. Pure dilution to fund a highly speculative hybrid model.
That's the rundown. From unsustainable payouts to crypto gambles, we'll see who survives the pivot.
Catch you tomorrow.